What's up, guys? I'm here today to do another video lesson. I just released my OBLN video yesterday, and I got hit with a lot of questions that I just want to clear up, make it easy for you guys. Um, how I use market cap, float, shares outstanding, and the SEC filings for my trade ideas. So this is going to be a short video. I'm just going to go over that for you. I want to make it clear. The three websites that I use in my videos are all free. I'll link them every time in the video. First one here is Finviz, Trade Ideas, free charting, and the secfiling.gov for your SEC filings. So let's get in here. Let's go to Finviz. We're gonna use ADTX today as a runner. ADTX, if I can type it right. So if you type the ticker in the upper left, you're going to get to this page here. And I'm looking for three things on this page. Not only do they have a nice chart, they show the shares outstanding, they show the float, and the market cap. Three things I just talked about. And let's break it down and what they mean to me. First thing I'm going to look at here is shares outstanding. And I want the lowest shares outstanding possible. The lower the better. But not necessarily, it's not a rule, you know, these are guidelines. Criteria shows the lower the float, the lower the shares outstanding, the better the opportunity that it can spike. And when I say it can spike, I mean these companies. So we'll go to the float here. It's pretty much the same thing. These are available shares for retail traders to trade. So when I'm looking at the float, again, I want the smallest float possible. I consider anything under 10 million about a mid-size. When you start to get into the 3, 2, 1 million, that's small, mini. So when I'm looking at the float, the lower the better opportunity can spike. Now, when I compare shares outstanding with the float, I want them to be as equal as possible. What that's telling me is if there's more shares in the shares outstanding than the float, then we have a lot of big investors in the company. Those big investors don't buy at retail prices. They buy at diluted prices. Retail, that's bad for retails and it kills momentum. So we want to keep that number as close as possible. You don't want to have a 15 mil float and 150 mil shares outstanding. That means a lot of institutions own that at a lot cheaper prices than you're going to be buying it. And that's scary. Okay, so we kind of went over that quickly. I feel pretty confident in that description. So let's go over to the market cap. Market cap, I'm looking, the lower the better the market cap. You have to think of market cap as the value of the company at that time. So how you get the market cap is you're going to multiply the shares outstanding by the current price that it's trading at. So if you take 12 million times that by 3.8, you're going to get here $48 million. That's what this company's trading value is right now. Now, the companies that we trade, they go up and down a lot, the market cap, because the volatility is so high. So you could say here on the peak of this company today, you're going to take 12 million, 12.28 times 6.73, which was the high of the day. At the peak of this trading day, this company was worth 82 million. So I mean, now it's half that. So you get it. So when I'm thinking of market cap, lower the lower the better the opportunity can spike. Think of a $10 million company will take 10 more million to double that to a 20 million. Now if you have a $40 million company, now you're talking that this company has to trade 40 million more dollars. So that's where we're at with that. So the lower the better. Now let's get into the SEC filings and how real quick what I'm doing here. So I'll get to this page and I'll actually type the ticker name. Okay, so on the SEC filings, they're going to show all the press releases, which is an 8K, but that's not what I want to show today. The question was dilution, and I'm just going to throw this part with the SEC filings. So the dilution here, I'm looking for 424Bs, 4s, and that's this form right here, and that's a dilution form with an S shelf. So I'm going to click on that and see what it is. You can see here it's 2 million shares And when you're looking at this page, you're usually going to see this graph right here that shows the offering price, what they're offering the price at, how many, or I'm sorry, the value of it. You know, it even shows you what they paid for this. So this almost cost them $1 million to do this. So this isn't free for them, but this is usually the majority of how these companies will make money, because a lot of them don't have products, or they'll have one product which doesn't generate too much income. So okay, let's get back on topic. So 2.4 million shares at $4. Let's go to the chart and see if that plays a role. Let's get on the daily. So $4, kind of almost closed at $4 today. So this is a level that I would use. I would just put a trend line there, during the day for me if I was trading this, and I would remember, okay, this orange trend line or support line, resistance, whatever, is where and I'll even maybe put a note in it sometimes. Depends how many tickers I'm looking at, but so I'll put that here, and I'll have that information, and I'll use that key level accordingly. If it's support or above it, obviously I'm going to play it as a support line, or below it, a resistance line. And you can see here, you could have used that level pretty damn good today, and for a nice bounce, $1 a share bounce. So that's how I use dilution. That's a real quick breakdown of how I use it. Again, this is just a quick video going over some of the questions that I wanted to answer real quick. If you have, I'm going to end it there. So if you have any other questions, if I sped through something that you didn't really understand, hit me with a comment below. I'll respond. Hit this video with a like, subscribe, and I will see you on the next one. Take it easy.